So a good friend of mine texted me this hot property the other day in Hawaii Kai, which is on the east coast of Oahu. And I've known this buddy since the 3rd grade, and he and his wife are moving from the mainland and retiring here in Hawaii to be close to family. And oh, it's an amazing 2-bedroom, 2-bath condo right on the water, overlooking the marina, ocean in the distance, and mountain views too. Chris, he said, it's $350,000. Hold on a minute. I know those hot condos. They typically sell for $1.2 million. That condo you saw on that website that starts with a Z and rhymes with pillow isn't telling you it's a leasehold property. So he's like, Chris, what's a leasehold property? What's leasehold mean? In this video, we're going to explain the difference between the two different types of property ownership in Hawaii. There's leasehold and fee simple, and we'll break it down for you. And stick around where we're going to share with you the pros and cons of each to see which one could be the best fit for you as you think about buying your next home in Hawaii. And we'll get to it right now. Aloha and welcome back to our YouTube channel. My name is Chris Shomo, real estate agent and founder of Home Sweet Home Hawaii Real Estate, brokered by eXp Realty. Today, we're going to talk to you about a really important topic, the two different types of property ownership in real estate here in Hawaii, leasehold and fee simple. Now, we get questions about this all the time. Leasehold, in layman's terms, is mostly the same as buying a lease. You put a whole lot of money down to buy the structure, but you don't own the land that the home sits on. I'll explain more in a bit. But with fee simple, you are actually buying the house as well as the land. And if you're buying a condo, then you're buying the property as well as partial interest in all the common elements. Confused yet? I'll break it down easy for you. First, let's start with fee simple. Fee simple is the most common form of home ownership. It's just like buying pretty much any house in the good old US of A. It is the complete form of property ownership. The owner, you the buyer, has full control over the property, including the land and any structures on it for an indefinite period of time. This type of ownership includes the rights to use, lease, sell, or give the property as an inheritance as the homeowner wishes. Now let's get into some pros of fee simple. Pro number 1, you have full ownership. Owners have complete control over the property. But an asterisk here, remember, if you're a part of an HOA, which many homes are in the newer areas of Oahu, you're going to be more limited on what you can do to the exterior of your home, for example. Another big pro of owning fee simple in Hawaii is the long-term investment. It can be held indefinitely and passed down through generations to generations. And pro number 3 is flexibility. Owners can make changes, improvements, or even demolish structures without needing permission from another party, subject to local laws and zoning regulations and HOA rules, of course. And pro number 4, of course, compared to leasehold properties, there are no lease payments. So there are no ground rent or lease payments required. Now, pro number 5, and likely this is the biggest pro, is the equity building here in Hawaii. The owner can build equity over time, making it a potentially lucrative investment. And I say potentially, but realistically that seems to be the case. In Hawaii, over a 40-year span, we see an appreciation increase of 4 to 5% annually. Now, some pockets and neighborhoods see much more than that. Our neighborhood, for example, has increased over 30% in the past 5 years. Yeah, that's definitely a major motivator for savvy investors and home buyers who buy here. Now let's get into some cons of fee simple. Number 1, you are going to have a higher upfront cost. Purchasing fee simple properties usually requires a larger initial investment, like a down payment. Fee simple properties are usually double or triple the cost of leasehold homes. And if you're financing a loan, a typical down payment is, say, 20% of the total sales price, although they do have loan programs with 5% down conventional financing now. And there's FHA financing, a government loan, which is only 3% down. And there's even another government assistance program called USDA loans with no money down for some qualifying areas. But that said, if you're military, this doesn't necessarily apply to you because you can use your VA loan benefit to buy with no money down, no private mortgage insurance, and you can use your COLA and BAH toward your mortgage payment. It is seriously a win-win for our veterans, which they undoubtedly deserve. Now, for more information on that, if you're a vet, be sure to reach out to us. Check out our video on PCSing to Hawaii, or feel free to reach out to me directly. You can give me a call or send me an email or shoot me a text or set up a quick meet and greet on our Calendly link. We're always here to make your move a smooth and quick and enjoyable experience. Okay, now going back to the cons of fee simple, and there's really only a second one, is the market risks, right? Property values can fluctuate just like anywhere else in the US, impacting the owner's investment. So of course, no one has a crystal ball or is able to predict if there will be a market crash, right? But since Hawaii has always been one of the most desirable places to live, and we have a lot of international buyers and residents, we tend to be less impacted by the US economy by comparison to the other states on the mainland. And of course, in Hawaii, there is limited land. So for these two reasons, our property values tend to not dip as far and then rebound fairly quickly when there's a dip. Now we'll get into leasehold ownership. And what is it? Leasehold refers to a situation where a person, we will call them lessee, leases property from another party, the lessor, for a specific period. In a leasehold arrangement, the lessee does not own the land, but has the right to use it for a designated number of years as specified in the lease agreement. Now, at the end of the lease term, ownership typically reverts to the lessor unless the lease is renewed. So although technically you're buying the actual structure of the property, whether it's a house or a condo, you're not buying the land it sits on. So in addition to your mortgage for the structure after you, quote, buy the property, you are also going to pay a separate monthly lease. So think of this additional payment as a rent for the land it sits on. So this cost differs by multiple factors like where is it located and what type of structure is it? Is it a detached house? Is it a townhome? Is it a condo or apartment? And if it's any of the latter, you're also going to be looking at the additional expense of maintenance and HOA fees. So check this out. Remember the story I told you with my friend interested in buying the gorgeous condo on the marina with mountain and water views in Hawaii Kai? Well, that condo and that building in particular, the cost was very low for the area and for the beautiful condo itself, for $350,000. Seems like a great deal, right? But those condos typically sell for $1.2 million fee simple. But even if it's one of the most gorgeous homes on the market, when it comes to leaseholds, in addition to the $350,000 purchase price, you've got an additional lease rent amount of about $21,000 a year, which comes out to about $1,850 a month. Plus you have maintenance and HOA fees for an additional $700 per month on top of that. Having said all that, leaseholds can still make a lot of sense for some buyers if it's the right property in the right situation. So let's break it down why. So we'll go through the pros of leasehold. So pro number one is the lower initial cost. Leasehold properties are often way less expensive upfront than fee simple properties. Like I said, that same condo for $350,000 in Hawaii Kai would cost around $1.2 million fee simple. Another pro is potentially lower maintenance responsibilities. Depending on the lease terms, the lessor may be responsible for certain aspects of property maintenance. And number three, predictable costs. So lease terms and ground rent can provide predictability in costs over the lease term, but not knowing what the future lease amount will be at the end of the lease term poses a huge con, right? And number four, this is a really great pro for the right people. Leaseholds are typically best for investors who can leverage and cash flow their properties and hedge against the years left on the lease. Or leaseholds can be great for an individual who don't necessarily have a whole lot of cash and who don't plan on leaving his or her estate to heirs and who want to live their best life now and the nicest accommodations for themselves with the least amount of buy-in and not having a big mortgage to carry. Some of the cons of leasehold include, number one, limited ownership duration. So what I mean by that is the lessee only has rights to the property for the duration of the lease. And typically leases are renewed for 30 to 50 years. Another con, as we mentioned, is the ground rent payments. So lessees usually make regular ground rent payments to the lessor on top of the HOA and maintenance fees. Another big con, and it's a big one, is the renewal uncertainty. So what do I mean by that? There can be uncertainty about renewing the lease. You just don't know if they're going to renew. And if they do, how long will the new lease length be and at what cost? Lease extensions may also come with significant costs. And number four, and probably one of the biggest cons, is it's a depreciating asset. The value of a leasehold interest declines as the lease term approaches its end, potentially making it harder to sell or finance. So what do I mean by that? The fewer the years on the lease, the less the property is worth. Here's a very important key though. If you want to sell your leasehold property, the best time to do it is when you have 30 years or more on the lease left, ideally, since that's when lenders can typically finance them with conventional loans. Otherwise, typically anything less than 30 years left would need to be purchased with cash, so you'll have a smaller pool of buyers out there. Or if you're an investor, just purchase with cash or a portfolio loan. So in conclusion, fee simple ownership is ideal for those looking for long-term investment potential, while a leasehold ownership is more of an affordable option for those who need it, for the here and now, who don't necessarily want to build long-term wealth and don't have family to leave the property to. So knowing what you know now, what would be best for you in your situation? Does buying fee simple or acquiring a leasehold make more sense to you? Can you think of any other unique situations, the benefit of owning a leasehold? Tell us in the comments below. Also, if you have any questions on what we covered today, or if you have any questions about real estate or buying in Hawaii in general, always feel free to reach out. Whether your move is in 9 days or 9 months, we've got you covered. Feel free to give me a call, shoot me an email, send me a text, or schedule a one-on-one Zoom chat. Here at Home Sweet Home Hawaii, we're here to make your move as smooth and stress-free as possible. If you found this video helpful, don't forget to subscribe to our channel and hit the like button, and also tap the bell for notifications. That way you can be first to know when we roll out our next video and keep you informed in the real estate market here in Hawaii. Mahalo for watching, and until next time, aloha.